We're having, of course, a similar pattern and a similar plot. We're looking, this is today's 4-hour chart, and we're seeing is this, just like with Bitcoin, we're seeing an inverted double head and shoulders. Now we were expecting the market to be doing a shoulder. It turns out to still be working inside of this head zone. We have inverted double heads. We can do just a smaller dip, sorry, and it would still be, we're still doing the same hit. We're waiting for a breakout of the 50-point moving average above the 200-point moving average. The rejection, we should have foreseen that it was coming because the market is moving inside of a wedge, and it rejected at the upper boundary of that wedge. You're looking at this wedge here. This is a very big pattern on the daily, right up, moving down from the market top all the way to the current candle. So this is where the rejection came in, and we should have forecasted it earlier. Anyway, there is now considered to be that we have a level 1 here. We have an internal count of a 1, 2, 3, 4, and a 5. We could be now maturing. The market is maturing into a standard Elliott structure. It appears to be there is a bounce, or markets attempting to do a bounce. It's possible to still see 2,600 levels because of the negative momentum that we'll be seeing on the 1 hour and 15-minute chart, but you can see this is now fading. It is contained on the 1 hour and beginning to reverse on the 15 minutes. So most probably we're not going to be seeing these levels, but we go on confirmation. If we have a confirmation, we buy into this. The next move higher should take out the upper boundary of that wedge, take us to $3,000 before we correct again, probably to 2,900 and 2,850, and then bounce to 3,200. Let's take a look at the 1 hour charts. This is today's 1 hour chart. We are so far contained at the lower oversold level on momentum, that point here. You can see we're having, of course, inverted heads and shoulders, the neckline here at that tweezer candle, and this is where the current market is supporting or attempting to support. We're just doing a second shoulder. You have a shoulder to the left here. We're doing that shoulder to the right. We're imitating the second shoulder to the right. We're being a bit bearish or a bit conservative. We think the market can move all the way down to 2,627, 2,590. 89 is shown here. We're waiting for a confirmation to long. Confirmation to long, of course, would mean we're wanting to see two dual positive momentum cycles on the 15 minutes and on the 5 minutes, at least a degree 1 on the 15 and a degree 3 on the 5. So we will not engage until we get that trigger, wait for confirmation. If you're already long, it's okay, we hold, because this is going to be a bounce soon, or it's still a valid position, and we only add on confirmation. Whatever we add, we can have a stop at that yellow arrow here above level 2 altogether, but below this point, this is an internal level 1. We're inside of an Elliott structure. If the bounce comes in here, forget maturity and momentum. Anything that's above 2,700, 2,689, current market is 2,726. So we're still above that level, 2,689, even below can get a spike into 2,650. Any bounce above these levels would mean that you're bouncing at an internal level 1, and that is a 1, 2, a 3. This was a 4. The market really moves up in a strong 5 and becomes a bullish market. Let's take a look at the internals. Now this is the 15-minute chart about 1 hour or so ago. This segregation is correct. We're having higher degree AB here and then an internal 1, 2. Now this is going to be a wave 3, and at the same time it is going to conclude C. That is conclusive of this A and B in yellow. So that 3 must be a 5-wave structure. It's labeled here in yellow and red. There's a 1, 2, there's a 3, 4. Market either has done a 5 and finished it. If you're going with the yellow structure, then you're about to bounce. If you're on the red structure, there is a 1, 2 already. There is, however, all of this is actually a 1, 2. There is a 3, and maybe there's going to be a 4 at that point. If the market rejects at 2,783, it will still dip to 2,658 or 2,650, and that would be the final end of that correction. in a wave 5 in red here to equate with your wave C. Let's take a look at it's a buy, of course, or a buy on dual momentum confirmation. If we get dual momentum confirmation, the market is a buy. Let's take a look now. It doesn't look we're going to get a confirmation until we get to see 2650 and 2640, because we can see we're getting still negative momentum. It is contained that oversold, but the structure itself doesn't. It looks more like a bear flag, and we're gonna break lower. Okay, for short-term traders, it is really possible still to do a short into this. If you wish, very small short, engage simply. You can see, of course, we're doing some kind of a bear flag, so we would engage a short at 2770, 2765. The stop for this is just 2840. There is a mast and the bear flag. Market, whatever we sell at 2770, we can take to 2670, just 127.2%, just $100 per 1/10 of a coin, and the risk becomes at that point between 2770 and 2840. It's just 70 points or $70 for that 1/10 of a coin. We would also show the internal pivot levels, so we can relate our entry to the internal pivots and supports on the 15-minute or 1 hour chart. Shorting 2770 would mean we're really shorting S1 here. Looks like we are actually resisting at S1,